Hi everyone, Stephen Stewart here. I'm going to talk about Orecap and how we create great companies. It's July 2025. It's a very interesting time in the market. Orecap is a very complex, but actually quite simple in what it does. We create great companies, we own great companies, and there's more great opportunities on the horizon. I'm going to walk you through who we own, who we're going to create. But first, I'm going to talk a little bit about where we are in the market. I think it's so important. As I said, it's a very interesting time. This is my incredibly scientific chart on how to mind the capital flows. It's all about watching where the money goes, how much of it, and when. You can see here, as I start, when the increased capital flows go, it leads to higher valuations. Of course, where the mining industry, the metals industry has suffered greatly over the past 10 years. There's a reason for it. That leads to liquidity, which in hand goes to higher premiums, which to me leads to the holy grail, which is sentiment. And that's when the market thinks this sector is near invincible and you can't go wrong. The capital continues to flow, and that's when it gets overheated, overvalued, poor decisions are made, and then the market crashes. And hence low prices will cure low prices, and the inverse is also true, that high prices will cure high prices, and the cycle repeats itself. But the question is, the billion-dollar question, maybe trillion-dollar question, is where are we within this super scientific chart? I believe we are at the early innings. I believe the capital has fled our industry and has gone to tech and other industries. So you can see here, I've cited this many times, NVIDIA. It's nothing wrong with NVIDIA. It's a wonderful company, but it made headlines because it's the first $4 trillion company. Can't go wrong, I suppose, right? Over the past number of years, certainly since 2023, you couldn't have gone wrong. Look at that chart. It's wonderful, and I can't blame capital for flowing right into it. And it has done. The valuations have gone up and the sentiment is great. Buy the dip. Can't go wrong. Maybe that'll continue for the foreseeable future. I don't read the tea leaves any better than you do, but I can tell you that that won't last forever, and the capital will look to rotate. And it'll rotate into another sector. You see that little flat blue line? Well, of course, that is the proxy for the junior mining industry in the form of the TSXV. It is not a fair proxy. There's a lot of noise in there, but it's the best representative of the junior industry. And you can see it's flat, boring. Why would capital go into there? Well, I would argue capital should go into there because, one, it's cheap, and two, it is the building blocks of our society or foundation. And we're headed into trade wars, hot wars, cold wars, you name it. There's a lot of geopolitical uncertainty. I finally think the West is waking up to the critical nature that all metals are critical, and that we need to invest in them and retain them for the future. It's not just about your IRR or NPV. It's about securing supply of these critical metals. Gold included is critical because it's the only thing that is money, in my opinion. Nonetheless, to me, this looks like a bit of an opportunity. In and of itself, that's not an investment thesis, but it's just a piece of anecdotal, maybe a little bit of empirical data there to suggest that there is an opportunity. Look where we are in terms of, and this is my final macro slide. I'm going to get into Orecap here, but just wanted to sort of set the table. This is the max view of the venture. And you can see the good old days of pre-2010 were north of 3,000, and now we're languishing below 800. We were languishing in the 500s for a long, long time, and that was really the pits of the low. You can see that the trajectory is headed up, so I don't think we're catching falling knives here in the industry, and it could go back down to 500 just as easily. But this does show that the long-term relative valuations of the sector is really, really low, which leads to the opportunity. And this is how we go about it here at the OR Group, and of course, Orecap. Again, very distinct opportunities between, or vehicles between OR Group, which is private. I'm the sole shareholder in OR Group, and one of our portfolio companies is Orecap, and this is what I'm talking to you about today. Orecap's, over the years, its existence, has collected material positions, equity positions, and ownership of physical land packages in the Kirkland Lake area. But its raison d'etre going forward is to acquire new assets so that we can have material positions in new companies that we create. They go public, we finance them, we put the right people in place, and of course we look for interesting opportunities. We tend not to chase what's popular. We be counter-cyclical, and we look at special situations. I always say we look to solve problems that nobody else can. Not nobody else, but where nobody else is looking, and that's where you make the opportunities. We don't necessarily chase. We look counter-cyclical, and then we provide our shareholders an opportunity to be involved at the ground level. So Orecap invests in these opportunities at the earliest possible financing. So ground level financing for Orecap. Then who in turn, our team installs a new team for that specific opportunity, like whether it's American Eagle or Awalé or XXIX. In addition to that, is you can get exposure as just through being a shareholder in Orecap, as we introduce new capital to the balance sheet of the new company that Orecap owns a material position, and you can invest directly into that company on that balance sheet. So we offer opportunities for our friends and our co-investors or investors to co-invest in these opportunities to get direct exposure to that particular opportunity. Whereas Orecap, you get more of an indirect, diversified series of exposures to our existing opportunities, past, present, and future, which I'll talk about towards the end of this presentation. We're always looking at new opportunities. And I will say we're always focused on the long term. Again, we don't chase. You think in terms of 5, 10, sometimes 20-year time frames. Now, I know that's not an appealing time frame for the investors in the public market. Everybody's looking for the quick buck. There's an opportunity to make quick buck, and I'll talk about how you can do that in this industry now. But really, when you own something, when you have material positions in either equities or assets where you don't have effective liquidity, you need to take long-term views on the commodity, the project, and the people that are the fiduciaries of this project. So that is critical. We have a long-term view because we don't want to hold the bag. You don't want to buy garbage and then when the music stops, there's too few chairs and we don't have one. So we always take great care into investing in high-quality projects. We look at the source data, we tear it down. We don't believe what any reports that have been written previously. We form our own opinion, and I think that shines through in our track record. You can't win them all. We're not batting 1,000 here, but we do pretty well. We have an established track record of being really strong on the geology, being really good at identifying high quality people who work for us and who we work alongside. And I think that speaks to the assets that we chase. Good people don't have time for bad projects. Just high level, this is just our logo of the portfolio companies here. There are others, but these are some of them here, and I'm just going to run through them quickly. There's more coming, but American Eagle, as everybody knows who follows the story, has been a big success. It went from basically $1 million to $100 million market cap very quickly with a couple drill results. Sounds easy, doesn't it? But it wasn't. It's been American Eagle it's been a tough road, but it's been fantastic. We've acquired the NAC project, which is, we think, the most interesting copper gold porphyry project in Western British Columbia. We stand apart from our peers in the sense that we have low topography, wonderful geology. Of course, it's not just about low-lying, flat-lying topography and elevation, but the geology's there. It's near surface. In the south, the gold and the copper zone there comes right to surface. We've got $36 million in the bank, drilling furiously with a 30,000-meter drill program this year. Aimed at a number of things. We're going to be delineating and expanding that near-surface mineralization zone, the south zone, as Tony and company call it, so the capital can demonstrate, or the project can demonstrate that it can pay back capital on these big mega porphyry projects. That is key. If you can't pay back the capital, I don't care if you have $2-3 billion, you need to pay back the capital in order to make this an attractive investment proposition. And that is where NAC stands out. As I said, it's easy to get to, it's low-lying, and the mineralization runs to surface. And then, of course, we're looking to expand the tonnage. We want to get to 1 billion, 2 billion, so on and so forth. This project has that sort of potential, as well as we are swinging for the fences on a number of holds, big step outs, looking for stuff at depth. So very sophisticated program this year. It's well funded for the years ahead. It's a very exciting opportunity. It's got some of the largest, or so the highest grade intersections that we've seen in British Columbia. As I said, we're drilling underway now, and it's fallen out of favor as these things do. It shouldn't, given the fact that it's well financed. Got two major investors in Teck and South 32, and it's drilling right now. We're going to rinse and repeat that same drill program out there in 2026. So there's lots of news flow coming. Assays are on the horizon, and it'll continue until probably the end of January, where we'll just sort of restart it back up again. These are some of the intersections I told you about. The grades, those are wonderful grades. You're seeing 600 meters at 0.75% copper starting near from surface. It's wonderful. It really is, and that's just one of a handful. There's many other, but I'm not going to get into details there. Awalé, another big success. Awalé's made a lot of waves lately. It brought in Fortuna alongside Newmont and, of course, alongside Orecap, one of our major positions. We invested in it about two years ago and have done extremely well. We hold a bunch of shares and a bunch of warrants. We're convinced this is a mine. It's just a function of how big it's going to be and when it's going to be built. The company now has $16 million when Fortuna just came in and put out some pretty spectacular drill results. It's a wonderful project. There's many zones. I think those zones are effectively just one project, will be one hub and spoke model underpinned by BBM, which is large, low grade. When I say low grade, sub 2 grams, not too low grade, excellent grades for open pit. And then the screamer holes come out of the Charger, which is just a few kilometers away. Very different style of mineralization, but those grades cannot be ignored. You can see the big hole we first hit last year was 45 grams over 32 meters. It's very nicely disseminated, lots of VG, but disseminated throughout. Andrew Chubb and team continue. We've had 4 wonderful holes out of Charger. The best news I've heard is they've got a control on the structure, which is critical. They're drilling to 450 meters, actually to 600 meters. My understanding is they're hitting the target geology at depth there on these to be released holes, but it just continues to hit. And there's lots more. Empire, Lando. I mean, there's just so many zones on this project. It's very interesting. And very fortunate to be a part of it. Came in there originally at a $3 million valuation. It's pushing a $60 million valuation. So again, wonderful win for Orecap. We look to repeat this sort of success. Of course, it's an outlier for us in West Africa, but Côte d'Ivoire has clearly been the best of the West in Africa. We like that jurisdiction, and Andrew Chubb knows West Africa as well as anybody. These are just some of the sections. You see BBM on the right. That's the slow and steady money maker there. And on the left, we've got Charger with its ultra sexy drill results. Some of the best drill results in West Africa in the last 30 years. That's exceptional. Very proud and excited to be a part of that opportunity. XXIX, certainly very close to my heart, as I was CEO of this company for many years now. Guy Labelle has been appointed. Guy is a good friend, a trusted mining engineer, knows what he's doing. He's been around. He worked for Capstone. He worked for FNX Quadra. He's seen a lot. People love working for him, and I love working with him. He is the right guy to move this project forward throughout the engineering aspects. Very recently, we put out a new resource from 2024's, and well, we put it out in 2025 about 3 weeks ago. The market shrugged it off, which is absolutely shocking to me. About 140 million tons at 0.7% copper equivalent, pit constrained. On the rail, on the road. I mean, all these things have been repeated, and all of that. So we added another 250 million pounds of copper equivalent, which within a much smaller pit. Pulled it away from town, made it shallower, dropped the strip ratio significantly. We're going to have a PEA out on this shortly. When I say shortly, we're aiming for the end of September. It's probably going to be October. There's lots of considerations, lots of moving parts here, but we believe we're going to demonstrate robust economics. This is just totally under the radar, totally undervalued. I have to say, I think XXX on a value to price basis is probably the biggest disconnect in all of our portfolio, because we've got Opemiska again, which we believe is going to be a mine, and then nobody's even paying attention to Cherry. And I'm going to run you through that just quickly. But we've got two of the three biggest copper resources in Eastern Canada, the highest grade open pit in Canada with Opemiska, and the largest copper resource with Cherry, which we just acquired at the end of 2024, which is going to be a sleeping giant. It's going to be much bigger than everybody anticipates. As I run through stuff here, this is just the pit. So just staying on Opemiska, this is the new pit, 141 million tons at nearly 0.7% copper equivalent. That's exceptionally high grades, probably twice that you get out in BC. And you can see the two pit shells, the 2024 pit shell versus the 2025 pit shell. That to me is material. There's a lot less rock that we're moving. It just totally changes the economics. As Guy says, this is the game changer. And there's more upside there. There's more mineralization that we've defined, and we're going to be drilling the Cook, which is a gold resource about 3 kilometers away from the pit. As you see, there's a lot more gold. And I'll note that the Opemiska is just the anchor of the district of Chibougamau. I think it's the best asset in the entire camp, but you got IM Gold there, you got neither Northern Superior there. This is very, very few districts, mature districts like Chibougamau, that are not completely dominated by the likes of an Agnico or one of the big majors, because they love the brownfields environment, which XXIX is sort of an expert in, is just loved because there's no better place to find copper than next to a copper deposit. And this is a former copper deposit, of course. So stay tuned on Opemiska. It's really interesting. It's a tremendous price to value opportunity, in my opinion, especially as copper is really catching a bid. Next up for XXIX, of course, is Cherry. It's large. It's very large to define it. It's got the K1, which is about 25 million tons at 1.6, and the K2, which is the high grade, but the real jewel here is the K1, which is very large. It's about 1.4 kilometers wide. It goes down to about 500 meters. It says it has a resource of about 50 million tons at 0.4. We think without drilling a hole, it is orders of magnitude larger. I'll repeat, orders of magnitude larger without drilling a single hole. Why? Because we've reinterpreted the geology. We went up and we saw the core. A lot of it in between the zones or the veins was not sampled. We cut it, we sampled it, we assayed it for the first time, and it carries. So that means instead of mining veins, we're now mining a big monolithic block. Again, look at the new interpretation there, and the sort of the dull maroon, if that's what color that is, that's the old 54 million tons. We now see the red, which is the new interpretation of the mineralized zones. The red goes across these dimensions. It's big. You can do the math if you want. It's very well mineralized. And we just talk about I should note, it's getting higher grade and wider at depth. And this is about 50 to 55 degrees slope, which means the strip is going to be beautiful on this. And we think it's, of course, we're chasing more higher grade, but we know the lower grade is there. It's very interesting. The holy grail, if we can say that, is it does the K1 plunge and connect towards K2. There's certainly evidence, geophysical and otherwise, to suggest it does. We think that previous operators drilled it too high up in the system. This project is just begging for drilling. It hasn't been systematically drilled in decades. Okay, and so I emphasize there's lots of value in Cherry. Stay tuned. We're going to blanket this with an aggressive drill program, come up with a big resource. It's really going to take everybody by surprise. There you go. My reputation's on the line for saying Cherry is going to be big. I believe it will be. Another investment here is Metal Energy. Admittedly, it's been a total laggard, but it shouldn't be ignored here. We've got the complete southern and eastern and western extension of Teck's Highland Valley operations. We acquired it out of a quasi-distressed situation. The previous operators were going to lose the land package. We financed it. We spent some money on it. We extended the claims. We're doing slow and steady work. It's got a number of zones that are just begging for drilling. It's slow and steady work. We're working on our permits. First Nations communications, if you will, in British Columbia. There are quite a few groups to coordinate with. So it's slow, admittedly. Has underperformed, admittedly. I'm a significant personal shareholder in this. I'm very motivated to see it through, not just because I'm a big shareholder, but because I like the geology. We are in the right rocks. Which is absolutely critical. There's others in the area who are not in the right rocks. We are in the right rocks. We're in the Highland Valley rocks, and we've got the right metallurgy there. It's a very interesting land package. We like it. It's slow and steady. We got a material position in it. Expect us to work it and do some other interesting things in this area. We're big believers in British Columbia. We're big believers in Canada now. Canada has to turn the corner. So look, this is just an additional expression of interest in British Columbia, copper gold porphyries right in British Columbia. It's a beautiful project. There's more going on in metal energy. We own a nickel project. Nobody cares about it. It's a wonderful project. It stands out on its own, but I won't get into that for time purposes. Now, another one of our portfolio companies, totally misunderstood. Mistango River Resources, we took it over through a proxy battle a number of years ago. Orecap owns nearly 25 million shares. Mistango is largest shareholder, of course. Mr. Sprott, it says Sprott there. It's not Sprott Business, it is Sprott ARIC. And of course, Agnico Eagle as well owns 10%. It's got a good amount of cash. In fact, it's trading for cash. And it's got a wonderful land position. It's got the western extension of the Macassa. We've drilled that a few times. It's tough drilling there because the mineralization is deep, but we hit nice. We hit a 1 ounce over 1 meter there. So the gold does go west. There's no question in our mind. What we call the Macassa, the Kirkland West project is very interesting to those who operate in that camp. It's a wonderful piece of ground. You're getting it for free because we're trading at cash. But wait, there's more. It owns the Omega, which is about 600,000 ounces at 2 grams, very shallow, very continuous mineralization. And we think with some drilling that will go much higher in terms of ounces in the ground. And of course, there's always the opportunity for a game-changing discovery when you're in a camp like this. The Omega is further east, away from the Macassa. It's closer towards Agnico Eagle's Upper Canada, Upper Beaver, and of course, closer towards Gold Candle's Kerr Addison deposit, which I'll talk about here, and I have in the past, but it's a 6 million ounce 1.5 gram open pit deposit with Pierre Lassonde and Rick Howes and others backing this company. It's going to be very interesting. Mistango River Resources is right in the mix there. We're in the right zip code. And of course, we have the right rocks, which has been drilled out. It's real. We understand it. It's larger, even if we updated that, it's larger than 600,000 ounces and getting larger with more drilling. This is what it looks like. We just doubled the land package there. You can see up in the north, those are new claims. But that's where we are. You got Upper Beaver right there, a MAG, soon to be Pan American Silver, surround us, and just to the east there, you can't see it, is the Pierre Lassonde's Gold Candle. The newest company that has been announced, but not announced in terms of its name, this is Kintivar. Now will be known as Original Metals. That's another play on gold, and we're going to be in Quebec. The focus is going to be the Roger project, which was vended out from XXIX, again in the Chibougamau district. I'll tell you what I think about Roger. It's about 500,000-600,000 ounces, kind of similar to what we have in Mistango's Omega, but it's different in that we think that is we think it's a VMS. And so why do we think that? Because we went and found the guy that drilled Roger out many years ago, back in the late 80s and 90s, a gentleman by the name of Peter Cashin. He's a well-known guy, great guy, love working with him. He's been on the team now for a few months. Very experienced geologist, and as I said, he was the guy that drilled out Roger. He was the guy that drove the ramp down into Roger. So I would argue that he knows Roger as well as anybody out there. And he's got an interesting idea on what Roger could be, and it's not just some gold and copper deposit. We think that deposit could mask a VMS system, and of course we are in definitely in VMS camp over there on the eastern side of Chibougamau. All those other assets outside of Opemiska, which is not a VMS, it's a copper gold orogenic style deposit. But that camp is well known for VMS, including Scott Lake, including Lemoyne, and many others. So this opportunity here, which Orecap will own once it closes at the end of August, will own just under 20%. So Orecap, again, a material owner in this new opportunity, new company called Original Metals, brand new leadership. It had a $2 million market cap, but it had $4 million in cash, along with a nice portfolio of assets that this company just wasn't on the radar. And we're going to put it on the radar with the rebranding, new leadership, new capital, new asset, new focus. And again, the OR group behind it. It not only does it have the Roger, which will be our focus, it has another portfolio of nice assets in the Abitibi, one of which is called ANIC, which is a joint venture with IAMGOLD, right in the heart of the Monster Nelligan camp. In fact, the ANIC project splits Monster and Nelligan right down the middle. So that's IAMGOLD's new Cote Lake. That's their new focus. We're right in the mix of it, as you can see. So it's a wonderful opportunity. It's completely mispriced by the market. It's currently cease traded. That's Kintavar. It's a sub $2 million market cap with $4 million in cash. Now it's going to own Roger and all these other assets there that we're going to evaluate. We're going to triage. Obviously, we're not going to focus on all of these assets. But the previous management did a pretty good job of accumulating a nice basket of assets, which we're going to look for optionality, look to monetize, look to be creative. But Original Metals is a new kick at the can, copper gold exploration company in the Chibougamau camp. So very exciting. This is what it looks like, Roger, here. We're surrounded by pretty good names: Northern Superior, Cygnus, which you may know as Dore Metals, as they merged with the Australian group, a very good capital markets group. So look, we're right in the thick of it. Got resource, got gold in the ground. A lot of work has been done on Roger. Previous to us, we acquired Roger 2 years ago, but basically did zero work on it. But it deserves to be worked, and it's a very interesting new angle with Peter Cashin coming in there to test a few things out. This is what the deposit looks like, but we're not just going to look at it as is. We have a new idea that we're going to test, and Peter's going to come out shortly with a webinar of his own explaining his geologic thesis, the who, what, why, and where, and how we're going to try and realize that. Hopefully, we're successful. As we get toward the tail end of this longer than usual webinar that I put out, but I wanted to explain what Orecap is. We talk about our physical assets. I had run through our equity positions and all those other great companies, but we still own a bunch of these physical assets, Megarry, Murado, and Knight, and this is where they are. This is Kirkland Lake. This is a Tier 1 camp. I hate saying Tier 1 or world-class, but you cannot argue that Kirkland Lake is a Tier 1 world-class camp. Tens and tens, 40 million ounces, I believe, is the exact number of gold that's coming out of there, and it's going to produce a lot more. Macassa is still pumping it out. Upper Beaver is coming online. Agnico Eagle is spending $150 million on development there. It's a multi-million ounce deposit. You've got Kerr Addison there, as I noted before, 5.6 million ounce at about 1.5 grams. We are right in the thick there. Look at Megarry, is right next door. We've got Murado, we've got our Kirkland West, and you can't see it here. We've got our Knight. I'll talk about that in a bit. But look, we've got these physical land positions in this camp. Very interesting. What are we going to do with them? We're going to spin them off. Eventually, they're going to monetize them. Orecap's mantra is not to invest in drill programs. It's to be material equity shareholders in other companies that move its projects and interests forward. So we are an investment issuer. We're not a traditional junior mining exploration company. Call us what you will. Some people say a merchant bank or holding, none of that. We're entrepreneurs who like to have equity positions in companies. There's lots of ways to make money in this industry. The primary way is through the drill bit, but you can be equity investors just like our retail and institutional investors are. That's sort of what Orecap is. But again, you can get in at the ground level, and we create new opportunities. So expect us to do that with our existing physical land assets, as well as new opportunities that I haven't spoke about, you've never heard of, we're always looking at opportunities. The McGarry project is one that I think has gotten a lot of people's attention lately, not just because it's got a high grade resource that was actually mined from 10 years ago in its shaft. It's got a 3,000 foot shaft that was spent $60 million rehabbing and mined from. Of course, I've been very public about that we own the tailings, 36 or 38 million tons of tailings. You can see the tailings are right here. So this is where the Kerr Addison outline of its pit is. This is where the 5.5 million ounces are. And these are the tailings here from when it was operating as a mine, which produced 11 million ounces at 9 grams per ton. Pretty amazing. And all the tails came onto our property. We own them. And that's pretty interesting, in my opinion, because if you look at the recoveries, the Kerr Addison's recoveries, which are published in the 43-101 from Gold Candle, you can see recoveries anywhere from 70 to 90%. So if you're mining 9 grams and you're only as the head grade, or that's the recovery, and then what you're only getting 70 to 90%, depending on what type of ore. Using very back of the envelope, unscientific math, there's an awful lot of gold sitting there in that 36, 38 million tons there that are on the Trans-Canada Highway, sitting at surface. Are you going to recover 100% of whatever's left? No, you got to do the metallurgy, and there are no slam dunks in life, unfortunately, I've learned. But this is very interesting, very valuable, especially now that the attitude from the province, who determines your ability to reprocess these tailings facility, has completely changed. Now they want you to clean it up. And of course, you're only going to clean it up if you make money. But we think there's a really good opportunity to make money here. And of course, if it was a part of other projects in the area, it could be feed. So there's lots of interesting things, not just the shaft, the infrastructure, and the value that has next to a major new operation coming online. The McGarry project is really, really, really interesting. I emphasize very interesting, completely overlooked in terms of price reflected in Orecap. Doesn't mean that there's no value, and it doesn't mean that we're not going to realize value. We will. It's just about getting the right opportunity, the right time, but the stars seem to be aligning. Nonetheless, we've got a wonderful asset there. The Morado project, the first asset that Orecap ever owned. It did a tailings reprocessing back, 2015, sent 25,000 tons and collected revenue there. It's a nice project. It's got a PEA. You can see it's about a toll milling, so the IRRs on toll millings tend to be high because you don't have to build anything. But nonetheless, it's a nice resource. It really does. It's on the south side of the break, which is not traditionally where people want to be, but there's a lot of gold there. 2 former producing mines in the project. As I said, we reprocessed some stockpiles there, made money. So there's definitely a project there. There's good neighbors there. I think it's a really interesting project, but it does need time, money, investment, and some geologic brain power. We will spin that off and create value. I assure you when the time is right. The last physical project here is, I look again to wrap this up, I'll try to keep it interesting here, is the Knight project. The Knight has some pretty sexy intersections. Look at that, nearly 20 grams over 65 meters. That's a Brescia pipe. We're familiar with Brescia pipes for those who are invested into Awalé. Not too dissimilar, except for this one is in Shining Tree, Ontario, on the highway next to the Juby, which is an asset that I go way back with. And at Juby now, it used to be 4 million ounces. Now it's 2.2 million ounces. Used to be owned by ARIC and Temex and Tahoe, and it's traded hands many times. Nobody has given this much love, but now it's acquired by this company called McFarland Lake. I don't know much about them. They're sort of more of a shell company, but they just announced a $22 million US, so let's just say $30 million. They are paying to ARIC to own the Juby, and it's now 2.2 million ounces. Let's take a look. Are we relevant to Juby? I certainly think we are. Did I mention that McEwen and Justra are shareholders of this new company, McFarland Lake, who will soon own the Juby? We've got the Tyranite, where the Minto, where you get those extremely flashy grades, a la Awalé. I mean, really quite exceptional. and the Tiranite, which is a former producing mine, had a shaft. We took it down. But lots of history there again. And then Porphyry Lake. This whole Shining Tree area is really a riddle wrapped in an enigma, so to speak. It requires consolidation, requires drilling. We are convinced there's something there, but it needs dedicated time, etc. Again, it's not our focus. We look to be equity holders in somebody who will develop this with their capital, their intellectual property. But we have a seat at the table there with an exceptional asset that we call Knight. What are we going to do next? If you look at our news release from a month or two ago, we talked about creating new vehicles. These are what's called non-listed reporting issuers. They eventually will be listed on the likes of the Toronto Venture Exchange. But what we have done is we have created, through the distribution of our shareholders, new vehicles that will be shells, to use a lack of a better term, that we will put new assets, new capital, new management teams in place, and of course, Orecap going to be a material shareholder. And that's, again, consistent with our business model. Whether it is our existing land packages, a la McGarry or Knight or whatever else we want to put in there, or it's a new opportunity that we put in there that is not in our existing portfolio of assets. It speaks to what our plans are. And we are going to be doubling down on what I see as a really interesting opportunity. To go back to the opening slide where I said, I just painted the picture of macro. Whether that happens this year, next year, we are close and we are preparing ourselves. And as I said, we are doubling down, taking some calculated risks to get in front of the wave, which inevitably will come. So that's just some context on that news release, the new opportunities, the new companies where Orecap will be material shareholders, with new capital off our balance sheet. But I rest assured, we will have material. When I say we, Orecap will have material, meaningful positions in those new opportunities, whether there are physical assets that I just walked through or something completely different. So what's our next deal? Stay tuned. As I spelled tuned very wrong there, and that's embarrassing, but maybe I'll edit that out. Maybe I'll let it stay. But we are working on a whole series of opportunities at the org group that Orecap will get exposure to. It starts with the people. We've got new people joining our team who are believers in what we do, want to be a part of our platform, which assists them in operating the companies, assists in gaining access to capital, assists in being able to evaluate the technical, the legal, and the capital markets side of things. That's what we've built at the org group. That's the benefit of being a part of our microcosm of companies. And of course, Orecap is the manifestation, the public company manifestation of that. So with that, I've spoken long enough on my Sunday here. I will wrap it up with the final push for the org group of companies. Great people, great assets. I'm privileged to work with everybody here, and I love what I do, and so I don't really work. That's kind of how I feel about it. Anyways, moving forward, that is the disclaimer. We are in a very risky business, ladies and gentlemen. Make no mistake about it, but we do take calculated risks. We try and be very forthright about those. We fail a lot, but I think we do really good work, and we will be rewarded in time when those capital flows come back to the sector. If you want to reach out to me, these are my contacts. My name is Stephen Stewart. I'm the founder of Orecap, founder of the org group, largest shareholder and chairman of all companies within the org group. And I'd be pleased to talk to anybody who wants to talk about our group of companies or our industry. Thank you for your time.